The exchange rate between the American dollar USD and the Russian ruble RUB has long been a focal point for investors, traders, economists, and governments alike. Observing the movement of these currencies can provide a window into global economic trends, geopolitical tensions, and market sentiment. In 2025, the USD-RUB pair has continued to experience notable volatility, reflecting broader shifts in both the United States and Russian economies, as well as in international markets. Understanding why the ruble strengthens or weakens against the dollar requires a careful examination of multiple economic, political, and market-driven factors, ranging from inflation rates, monetary policies, and trade balances to sanctions, energy exports, and investor confidence. Historically, the ruble has been more volatile than the dollar. The U.S. dollar, as the world's primary reserve currency, tends to exhibit relative stability. Its value is influenced primarily by U.S. economic data such as GDP growth, employment figures, inflation, interest rates set by the Federal Reserve, and broader global demand for safe haven assets. On the other hand, the ruble is closely tied to Russia's economic performance, which is heavily reliant on energy exports, particularly oil and natural gas. Consequently, fluctuations in global energy prices often directly impact the ruble's value, leading to sudden surges or drops depending on market sentiment and geopolitical developments. In 2025, several key factors have been driving the USD-RUB exchange rate up and down. One of the most significant influences has been the ongoing geopolitical tensions between Russia and Western countries, which have affected investor perception of risk associated with Russian assets. Sanctions, trade restrictions, and diplomatic pressures can lead to capital flight from the ruble, increasing demand for safer assets like the dollar. Conversely, when Russia stabilizes its trade relationships or energy deals, foreign investment may flow back, strengthening the ruble. This seesaw pattern of investor confidence is one of the primary drivers behind the frequent up and down movements in the exchange rate. Domestic monetary policy also plays a critical role in the exchange rate dynamics. The Russian central bank, known for its interventions in the foreign exchange market, often adjusts interest rates to control inflation or stabilize the ruble. When interest rates rise, the ruble becomes more attractive to investors seeking higher yields, pushing its value up against the dollar. Conversely, lower interest rates may weaken the ruble, as capital may seek higher returns elsewhere. Similarly, the U.S. Federal Reserve's policies influence the dollar's strength. If the Fed raises interest rates to combat inflation, the dollar may appreciate globally, making it more expensive relative to the ruble. Conversely, rate cuts or accommodative policies may weaken the dollar, allowing the ruble to gain relative value. Global economic conditions further impact USD-RUB trends. For example, shifts in commodity markets, particularly oil and gas, can dramatically affect Russia's currency. Since Russia is one of the largest energy exporters, high oil prices tend to strengthen the ruble as they increase foreign currency inflows from energy sales. Conversely, a drop in oil prices can lead to a ruble depreciation. The U.S. dollar, as a global currency, reacts differently to these movements. When global uncertainty rises, investors flock to the dollar as a safe haven, often pushing the ruble down. This counter-cyclical behavior creates periods of rapid appreciation or depreciation in the USD-RUB exchange rate. Another factor contributing to the up and down movement of these currencies is trade balance and economic growth data. The United States, with its diversified economy, usually maintains a relatively stable trade balance. Economic indicators such as retail sales, industrial production, and consumer spending provide insight into the health of the U.S. economy, influencing the dollar's global strength. Russia's trade balance, heavily influenced by commodity exports, is more volatile. Surplus years tend to boost the ruble, while deficits, especially under the influence of sanctions or lower commodity prices, weaken it. Political developments and government stability also have a substantial effect on currency value. In Russia, political decisions, election outcomes, and public policy can influence investor confidence. For instance, government actions that encourage foreign investment or maintain fiscal stability may lead to a stronger ruble. On the other hand, political unrest, corruption concerns, or controversial international moves can trigger capital flight and ruble depreciation. In the United States, policy decisions regarding taxation, fiscal spending, and trade agreements impact the dollar, though the effect is often more gradual due to the dollar's status as a reserve currency. The interplay between USD and RUB is also affected by speculative trading and market sentiment. Traders in foreign exchange markets often respond to news, rumors, or macroeconomic forecasts, leading to rapid and sometimes exaggerated currency swings. This speculative activity can amplify both upward and downward trends in the exchange rate, creating short-term volatility. For example, anticipation of tighter U.S. monetary policy or unexpected Russian economic reforms can trigger large movements in the USD-RUB pair within hours or days. Additionally, global crises such as pandemics, conflicts, or natural disasters can significantly impact currency valuations. Investors tend to move their funds into perceived safe haven currencies like the USD during times of uncertainty, which can depress the ruble. Conversely, periods of global stability or high commodity demand may result in a stronger ruble. Thus, the USD-RUB relationship is a constant tug-of-war between global investor sentiment, economic fundamentals, and political developments. In recent months of 2025, the USD-RUB exchange rate has shown patterns of alternating periods of appreciation and depreciation. Analysts point out that these fluctuations are partially due to ongoing sanctions imposed on Russia, which continue to restrict its access to global financial markets. At the same time, high oil and gas prices have provided temporary relief, supporting ruble strength during certain periods. In the U.S., the Federal Reserve's cautious approach to interest rate hikes has maintained a moderately strong dollar, yet global uncertainties have caused intermittent volatility. For investors, understanding the up and down movement of USD and RUB is essential for risk management and portfolio diversification. Hedging strategies, currency swaps, and careful timing of currency conversion are commonly used to mitigate the risk of sudden ruble depreciation or unexpected dollar gains. Businesses involved in international trade also closely monitor exchange rate trends to protect profit margins and reduce exposure to currency risk. The USD-RUB exchange rate impacts import and export costs, pricing strategies, and overall competitiveness in global markets. Looking forward, the outlook for USD-RUB exchange rate movements remains uncertain. While long-term trends suggest that the dollar will maintain global strength due to its reserve currency status, the ruble may experience periods of appreciation or depreciation depending on energy markets, geopolitical developments, and domestic economic policies. Analysts predict that volatility will likely continue, with occasional sharp swings influenced by sanctions, commodity prices, and investor sentiment. Understanding these dynamics is critical for traders, policymakers, and businesses seeking to navigate the complex interplay between these two currencies. In conclusion, the relationship between the American dollar and Russian ruble is shaped by a combination of economic fundamentals, political developments, market sentiment, and global crises. The frequent up and down movement in their exchange rate reflects the complex and interconnected nature of the global financial system. While the dollar benefits from global demand and stability, the ruble's value is closely tied to Russia's economic performance and geopolitical standing. Investors, businesses, and policymakers must continuously monitor these factors to anticipate currency movements, manage risks, and make informed decisions. As 2025 progresses, the USD-RUB exchange rate will remain a key indicator of global economic trends, with fluctuations providing both opportunities and challenges for those navigating the international currency landscape.